Hey traders, Raghee here. Happy Friday, happy options expiration Friday. Great to see everybody. Hope you've had a good week. Hope it's brought you a lot of great opportunities. It's been a very interesting couple of weeks where discerning where the trends are and are not has not necessarily been easy, but it's been there. And I hope that the last couple weeks of episodes have been pointing you in the right direction. So as always, thanks for joining us. Charts and coffee. All right, so let's get to it. Happy Friday, everyone. All right, so let's see. First question. Oh gosh, blast from the past. Hey there, John. Bought my Forex on 5. That was my last book, 2012. I'm trying to remember when that was printed. So thanks. I trade stocks. I want to know if I include extended hours on my time frames. Yes. Thanks for buying the book. Yes, I do include extended hours on. So I look at the stock market and the futures market, the more as a 24-hour market, like I did for 20 plus years as a Forex trader. Absolutely. And, there will come a time, and futures are nearly there, where the more that we've gone electronic, that 24-hour market, while not as equally from a volume standpoint, evenly spaced, I think there's going to come a time where we're going to have to, that 24-hour market, especially in futures, is more and more relevant. So thanks for the question. All right, Baidu. All right. So, and this is where I'll tell you all that a buddy of mine, Brian Shannon, Alpha Trends, you might know him. He's a great trader, good friend. And, he always, it's off-putting to some people sometimes, but he always says, look, if you want to ask me a question, ask me, what do you think about a buy on this level, et cetera, et cetera. So I would love to encourage that kind of dialogue where you guys let me know, what is it that you're looking at? Do you have a position? Are you looking to get long? Are you looking to collect credit? What's a little bit of the plan? Feel free to type it in, because the more that, you guys give me an idea of what you want to do, I can be helpful. I've got no interest in Baidu. It's a double red. If you're interested in waiting for a 1, 2, 3 low, that could be something you can do, but I'm not gonna, what's my comment on Baidu? Not looking at it. It's a double red within an overall uptrending market. But if you're saying to yourself, and add this in your questions. If you're thinking, Rog, do you think it could reverse? I'm really looking long. Do you see a volume ledge? I do. Are we below the wave? We are. What's it going to take to start looking at this market to go neutral? Yellow. And at that point, it might be something that would be more interesting. And I think something that at that point, if we're looking for the resumption higher in Baidu, would make sense. And then, let's say you want to look at it from an ETF standpoint. Let me know. That's where you can look at things like FXI and MCHI and maybe take advantage of the larger narrative around Chinese stocks. Or let's say you want to go specific Chinese internet stocks. That points you over to the K-Web. So there's a lot of cool narratives attached to a symbol. Let me know a little bit more what you're looking for, and I'm happy to do a deep dive. And that way, look, you come away in our sessions with more of a plan. All right, Microsoft. Again, what are my thoughts? I'm not even looking at Microsoft. It's not something that, again, in the perspective of double green, overall uptrending names, we're not seeing it in tech largely. Now, if you do have an interest in Microsoft, I would watch XLK, I would watch Apple, and I would just lengthen out the time horizon. And at that point, you have, what do I mean by lengthen out the time horizon? Take a look at the weekly. Weekly Apple looks amazing. Weekly Microsoft looks amazing. Weekly XLK looks fantastic. So sometimes the difference in your plan is going to be something as simple as a shift in the interval of your chart, And therefore, the knock-on effect of that is the time horizon. So I've got some longer term plays based on weeklies, when these beautiful double greens don't have to exist only on a daily. They can exist on a weekly here, and I'll just lengthen out my time horizon. And that's where I think leaps are amazing. And that's where I love the idea of this trend continuing. I just don't have an idea of when suddenly we're going to rotate and tech goes back into favor. Tech is still a disaster. I think what's happening to a lot of traders is they're getting, really optimistic on days that tech is up, when in reality there are better trends elsewhere in the market. This, though, on a daily time frame, to me, has been a beautiful weekly type view for sure. How do I trade the 10-year TN? How do I trade it? I mean, it's a futures contract. I'm not quite sure, Madison, what you mean by the how. It's a futures contract. If you do want to trade it, you can trade the ETF alternatives. You can trade the futures contracts here. I wouldn't do a lot with bonds right now, because bonds seem insistent. Bond traders right now just want to have a battle with the Fed. And in the near term, bonds will lose. A lot of people don't accept that. They always want to say, well, bonds are a harbinger. They are, but they might be a delayed, 6-month, 24-month. Sometime we're going to look back on bonds and say, this is what bonds were telling us. But as far as the trade goes, bonds are trying to fight the Fed, and no one wins fighting the Fed. You guys might not know the original lyrics to John Mellencamp's "When I Fight Authority, Authority Always Wins" was "When I fight the Federal Reserve, the Federal Reserve always wins." But, it just doesn't quite work. But yeah, true story. Don't fight the Fed. And I think bonds are trying to fight the Fed. So if you want a better bond narrative, maybe take a look at gold, because as real yields are dropping, and you can look at the relationship, back to your question about the 10-year, you can look at the relationship of the 10-year versus the gold market, and you'll find it's an inverse relationship. When one's zigging, the other's zagging. And so that might be a neat way to play indirectly the bonds. So thanks for the question. Okay, so next up is, do I use a stop market order for options trades for a stop loss? So what do I do for stop losses? How do I control risk in the equity markets? The way that I do it is in terms of risk and engaging when we've gone beyond a certain point. I'm not usually looking at the chart for managing the trade. I'm actually looking at the value of the premium. And while not perfect in terms of the timing of the alerts, and we've kind of made the sector secrets folks aware of that, as far as some of the issues with alerts going out in a timely manner from TOS. I know, shocking. But, it's the one thing I'll give TOS credit for is that they're one of the only platforms that you can place an alert on the premium, on the value of the option, not a price-based alert on the value of the actual underlying stock or ETF or futures contract. So that's what I use. I use alerts, especially when it comes to risk management. I'm going to say something. I don't want you to mimic it, but I just want to be completely transparent. I haven't used stop losses, the risk-based stop loss, in 25 years. I know where they are. They're part of the plan. I know the point of validity for the trade, but I typically don't leave an order for a stop loss in the market. Trailing stops, yes. Targets, yes. Limit orders to enter, yes, but I utilize alerts. Personally, I utilize alerts a lot. And, when you're buying your options, if you're ever curious, okay, Rog, what's the worst case scenario? Let's say the market gaps down and I don't have a stop. Stop wasn't going to help you anyways. And then what's the worst case scenario? Look, I've been on the wrong side of earnings volatility. And you usually just sort of brace yourself for a 55 to 65% loss of premium if all things go wrong. And remember, stop losses are not going to save you from gaps. In the futures market, stop losses are not going to save you from limit moves. So sometimes it's a false sense of security. What you want to remember is what would be losing the entire debit? What would that look like? What would be losing the 55 to 65%. I don't want to let it go there, but I try to think of the worst case scenario. Those of you that are big fans of, say, Ryan Holiday and Daily Stoic, what is it, premeditatio malorum, just think about all what the bad case scenario may be. And you have to reconcile accepting that as the way the trade could go. And then that really naturally brings up questions of affordability, position size. Do I really want to take the trade? Things like that. So thanks for the question. A long position on CAR from the current level. Fantastic question. Do I like CAR? If I'm going to look at CAR, the first thing we're going to do is look at where CAR sits within the passive investing universe. So we would do, essentially, I'm just looking over to one of my monitors here. We would do a stock exposure tool. There we go. Stock exposure tool reverse search. And that puts you in XHB, I believe. That CAR reverse search is going to put you in the XHB. So the first question to ask is, XHB up to? XHB really has not truly recovered. This was a name I had to take some medicine on. Not fun, it just happened. Because when we had the CPI data out last week, and it was a knockout, it was a much bigger than expected number, it really shook up the long end of the yield curve. Long end of the yield curve and home builders and construction are going to be very much affected by some of the same things. So for now, we've backed off XHB. This was something that we had played indirectly since the end of February in the Sector Secrets Mastery. And now with a larger narrative, it's a macro narrative, not just a trend, but the macro narrative getting definitely upended. We're going to give it a minute to sort of collect itself. We'll look for some either VWAPs or volume ledges, wait for the market to maybe form a continuation 1, 2, 3. There's a lot we can do. But if CAR is tethered to that narrative, just remember it's got to fight the tide. And you're right, CAR looks better than the XHB. So kudos. This is a relative outperformer. Just remember, it might have a hard time moving higher because of the fact that XHB is going to want to pull it back some. And CAR has about 3 3/4% weighting in the XHB. So like the stock, I love the boat. I don't maybe like the tide that it's going to have to fight. But it is buyable. Just remember what your headwinds are. You want a little bit of weakness down into the wave to buy with some bearish momentum, not bullish, and I think you're good. So great question. Do I have any interest in potential reversals over the next few days in XLK? Next few days. So great question. Thank you, Chris. Do I have any expectations for reversals? What would the reversal have to look like? Well, the truth of the matter is this one is looking potentially like a potential continuation pattern that's broken out. So there is this really good argument for a 1, 2, 3 continuation. My main concern about it is it's only 6 bars wide, 8 days. So 6 actual sessions, 8 calendar days. I like to see at least a 10-day. That's usually where I find higher probability 1, 2, 3 continuations. But it is important to note, and you can see it right here, we took out the swing high. We took out that swing high on the chart, and I think that's pretty interesting. So your breakout happened just yesterday from that 1, 2, 3. A little shorter than I'd like. Could this be the beginning of that move? I'm not wild about it, but it's hard to bet against the fact that there might be a 1, 2, 3 here. There might be. And that actually bodes really well for the weekly uptrend that I showed you all already. Now, as far as the time horizon of the next few days, I probably would have told you don't know had we not seen the candle that we saw yesterday, in yesterday's session, where we took out the swing high. So there's a potential for that. And then remember that it is lining up pretty nicely with 2 weekly candles trading down into the wave, very close to a point of control on the weekly, beautiful volume ledges on the weekly, and that might be complementary. I do believe that could be complementary. So terrific question. Thank you. Next up is, let's see. Oh, EOG. Long, sure. It's a nice pullback. In terms of, again, what are the things that we can understand about EOG? Assuming that you want to be long, I would assume that's what you want to do. It's heavily weighted in FRAC. It's heavily weighted with an XLE. Well, XLE is a long position that I've had for a while. So as long as XLE continues higher, I like the narrative around EOG. Absolutely. I definitely like the narrative around EOG on a pullback to the 21 exponential. Do I like corn and beans at these levels? Well, remember, and if you've been, attending Charts and Coffee, you like bearish momentum. That's exactly what we're seeing there, Kevin. So good eye. Do I like them at these levels? Yes, I do. I do. Just remember that it seems that both corn and beans are seeing a little bit of rotation. So we might be seeing, one of the things you'll notice is when the reflation trade is taking a breather. We saw the inverse relationship between tech moving higher again, and then sort of a laggard in energy. Tech's moving higher again, and this time laggard in energy a little bit, but also laggard in the ag play. So it seems that whenever tech gets the markets, market participants' interest, the reflation macro trade tends to take a breather. Well, the breather is oftentimes the opportunity. I think the high beta, high momentum obsession that the market has with tech has probably hurt them more than helped them. And those traders who persist there, well, good for them. But it gives us here macroeconomically an opportunity to say, well, it seems that people have taken their eye off corn for a minute. It seems like people have taken their eye off beans for a moment, and this might be a little bit of favoritism. Remember, sector rotation is really attention rotation. Where attention goes, volume flows. And so if I know that the attention is moving away from this, we're seeing a little bit of lethargy. I'd like to see a nice volume level being tested, but at these levels, I'm with you. And then remember, if you don't trade futures, which is fine, not everyone wants exposure overnight in the futures market. I get it. A lot of times the initial margin requirements are quite steep. Remember, you do have CORN, the corn ETF, and you do have SOYB, the soybean ETF, and you do have things like DB, I'm drawing a blank here. And we just looked at this market the other day. Oh my gosh, I can't believe I'm drawing a blank. But there's an agricultural ETF, MOO. I want to say DBX, but that's Dropbox. But you want to look at some of those agricultural ETFs, like MOO would be a neat place to go. If nothing else, it's a hilarious titled ETF. Some other things you might look at from a reflation standpoint is getting beyond the ags and saying, all right, if reflation is going to have a little bit of a rollover, a little bit of lack of attention while tech is having its moment, what about steel? Still, we see a really nice uptrend here. And again, if that attention's waning in ags, you think to yourself, gosh, could this be a little unwind in the reflation trade? What's happening with energy? What's happening with steel? And of course, what's happening with energy, steel, and ags? Although they may not on the surface look connected, they are. And you'll see it oftentimes it's an inverse relationship to tech. So thank you for the question. Same goes with Exxon, Jimmy. Yeah, same thing goes with Exxon. When it comes to XLE, it's the heaviest weighted stock within it. So all the same things apply. Let's see what we have here. Gosh, I'm out of time. I got to run over to the options room. So for those of you that are part of the options room, I'll be doing the open here in just a moment. Thank you as always for being part of Charts and Coffee. And again, the more you can let me know what it is you'd like to do with the symbol. Are you bullish? Are you bearish? You want to collect credit? You want to put on a debit? Is it a longer term hold, shorter term? I can definitely give you a great, at least some plans and levels moving forward. So as always, thank you for your time. I definitely want this to be as useful and practical 20 minutes every morning as possible. So as I love the crew we have here. I love what you guys are looking at. Some terrific questions. Enjoy your weekend if I don't see you. and I'll see you all on Monday. Same time, same station. Be good to each other, gang. Until then.